if they're saying the recession is going to be mild, that probably means that they think it's going to be horrific, because they normally won't even acknowledge a recession, even when one is obvious. Now, they're never going to say, oh, we see a horrible recession. Oh, yeah, this thing is going to be really bad. I mean, there's no way they're going to say that.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
For the first time, the Federal Reserve members acknowledged that their expectation is for a mild recession. This is the first time I've seen that. In fact, the Federal Reserve never expects a recession. They're always optimistic, and so any recession that we've ever had has been a complete surprise to the Fed. Right? It's not like they said, I think we're going to have a recession, and then there was one. They keep saying, no, there's no recession, we're not going to have a recession, and then they have to come back and say, okay, we're in recession. Right? Because normally they're saying there's no chance of a recession when we're already in the recession. So the fact that they're willing to forecast a recession is a big thing. And if they're saying the recession is going to be mild, that probably means that they think it's going to be horrific, because they normally won't even acknowledge a recession, even when one is obvious. Now, they're never going to say, oh, we see a horrible recession. Oh, yeah, this thing is going to be really bad. I mean, there's no way they're going to say that. So the fact that they're even willing to admit that there's going to be one, now they're going to have to condition it by saying, well, we're going to have this recession, but don't worry, it's going to be mild. How the hell do they know? I mean, it's like once a recession starts, how can you be so sure that it's going to be mild? Because all sorts of things could happen in a recession. You know, you don't know. I mean, maybe when they started World War I, they thought it was going to be a little war, right? And then it ended up being a huge world war. You don't know what's going to happen. I mean, you start a war, you shoot somebody, and you never know where it's going to go. So, you know, this goes into a recession. Who the hell knows? Especially when you look at the gravity of the situation. Also, if the guys at the Fed had any appreciation of history, they would know that there is a tendency for a bust to be proportionate to the boom. And that makes sense. The bigger the boom, the bigger the bust. And why is that? Because during the boom, that's when all these mistakes are made, like banks loading up on low-yielding long-term treasuries and mortgage-backed securities, right? And then you get Silicon Valley Bank failing, or Signature Bank, or stuff like that. People taking out mortgages they can't afford to overpay for homes because they use adjustable rate mortgages, right? All kinds of dumb things. Companies that don't make any money are able to raise billions of dollars and go public, and people will buy NFTs. There are all kinds of crazy things can happen, you know, when everybody is drunk on cheap money. So the longer the cheap money is there, the more people get drunk, and the drunker they get, and the stupider decisions they make when they're in that state of intoxication, right? And so when they finally wake up, right, you have to fix more mistakes. So it makes sense. If you have a small boom, well, you have a small bust. You have a big boom, you know, you got a lot of mistakes to correct, you get a big bust. Well, the boom that we've just had is without a doubt the biggest boom we've ever had in a business cycle. I mean, I called it the everything bubble, and even a lot of other people now will admit it was a bubble in everything. So if this is the biggest bubble ever, and it accompanied the biggest increase in debt ever, right? The biggest monetary expansion, debt expansion. When were interest rates at zero? Never. You know, but we had it zero for 10 years plus. The Fed's balance sheet went from, you know, 800 billion, 700 billion, whatever in 2008 to 9 trillion. Right? The national debt now is 31 trillion, 31 and a half trillion, right? So we had this massive boom. And now the Fed just expects it to be followed by a mild bust? Why? Why should it be mild? You know, it should be severe. I mean, if we got away with a mild recession, that would be, I mean, completely crazy to get that lucky. In fact, I don't even think a mild recession is capable of solving the problem. Because remember, we make all these mistakes during the boom. We count on the bust, the recession, to correct those mistakes. Well, we made so many mistakes during this everything bubble that it's impossible to correct them with a mild recession. If we have a mild recession, it's a failure because the recession won't be able to accomplish what needs to be done. See, that was the problem with the recession we had in 2001, 2002. That was a mild recession following the bursting of the dot-com bubble. George Bush always talked about how that was the mildest recession ever. Exactly, that was the problem. We never really resolved the imbalances of the dot-com bubble. We just pushed them all into the housing bubble. So the reason that we had such a big bust in 2008 was because the 2001, 2002 bust was so small. And why was it so small? Because the Fed cut rates to 1%. Never should have done that. It should have allowed a bigger recession in 2001, 2002, and then we wouldn't have had the housing bubble and the financial crisis in 2008. And again, had they done the right thing after 2008 and learned from their mistakes in 2001, 2002, we wouldn't have blown up the even bigger bubble that has just popped, and we wouldn't be on the verge or in the early stages of a far worse financial crisis and a much deeper recession than the Great Recession, which they're now going to have to rename because this recession is going to be greater, despite the fact that the guys at the Federal Reserve are so confident it will be mild. And remember, they didn't see the Great Recession of 2008, 2009, which actually started in the fourth quarter of 2007. And in the middle of 2008, they were still saying that we weren't even going to have a recession when we were already in the middle of the worst recession since the Great Depression. So if they couldn't see that recession coming when we were in it and said we wouldn't have one, and now they're finally admitting we're going to have a recession, but they're qualifying it by saying it's mild, you better believe that this recession is going to be far worse than 2008 if even those blind Mr. Magoo's at the Federal Reserve can see this one coming when they completely missed the last one. Not only did I watch Warren Buffett interviewed, but I watched an interview with Janet Yellen, current Secretary of the Treasury, former head of the Federal Reserve. She was on CNN, and I was watching an interview there, and she actually admitted in a conversation that America's decision, the Biden administration's decision to weaponize the dollar and sanction Russia the way it did, that action was putting the reserve status of the dollar in jeopardy. She recognized that. She said that this is creating an incentive for other countries to move away from the U.S. dollar over time. Maybe not that it would happen immediately, but that it would begin the movement out of the dollar. But in her mind, it was a risk worth taking, because she said this is a very important tool, and we use it very sparingly, and only when we have consensus among our allies. But the fact that she would even say that it's worth putting the dollar status at risk shows you how little she appreciates the tremendous benefit that the United States enjoys as a result of that status, and what would happen, the severity of the consequences if we lost it. You never want to put that in jeopardy if you understand that. So the fact that she could admit that, yes, this does put it in jeopardy, and that they're willing to accept that risk, just shows you how completely foolish they are. But maybe they see that it's happening because they don't want to act like they were completely blindsided. But the main reason that Janet Yellen said that she didn't think it was a serious threat in the short run is because she says that there's no other country that has a currency that the world could use in replace of the dollar. And maybe she's got a point there, but what Yellen is overlooking is that they don't have to use another currency. They've got an alternative that is better than any currency, and that is gold. And what is going on? Read the news. Central banks around the world continue to be big buyers of gold. Why are they doing that? It's not an accident that they're doing that. Central banks are talking about moving away from the dollar, and so they're buying more gold because they're going to rely on real money, not the dollar. And after all, if America has some political advantage with the dollar as the reserve currency, and you don't like that, why would you want to give that advantage to some other country? Why would you want to give it to Europe? Why would you want to give it to Japan? Why would you want to give it to China? You wouldn't want to give it to anybody. Nobody wants to be in a situation where they're giving another country a weapon that could eventually be used against them. Well, gold is not controlled by any one government. Nobody can print gold. Nobody can sanction you out of your gold if you custody it in your own borders. The only way you're going to get another country's gold is to invade the country and take it by force, right? We don't have to do that with the dollar. We don't have to invade anybody. We don't have to win any battles. We just push a few buttons and we've sanctioned you. But you avoid that by having gold. So if Yellen thinks that the dollar is safe because there's no other fiat currency that can replace it, she's wrong, because you don't need another fiat currency to replace the dollar because you've got gold, which is much better. Now, of course, I think other fiat currencies would actually be better than the dollar, but it would make no sense to make that switch because then you create another potential problem. So the solution that is obvious is gold. And the fact that she's missing that is significant. And it's why this movement out of the dollar is actually going to happen much faster than anybody thinks. It's because gold is going to be what replaces it. And that's why you want to buy your gold now while the price is still $2,000 an ounce. Because by the time the world realizes that this is in fact happening, or it's already happened, gold can't possibly be $2,000 an ounce. I think it'll be north of $10,000 in a world where the dollar is now the reserve where gold is the reserve instead of the US dollar. Now, I want to also talk a little bit about Chicago, because I mentioned, I don't know if it was my last podcast, but I forget which podcast it was after we got the results of the mayoral election in Chicago, and they elected a Marxist to be the mayor of Chicago. And I talked about how this is, really a disaster. I mean, they went from bad to worse in this election. And I talked about the fact that I expected a lot of businesses were going to leave Chicago, and they are. But I read a story and I saw this video about Walmart decided to close down 4 stores in Chicago. And the reason they're closing them down is because they're losing money. Right now, why are they losing money? Well, I think, number one, Chicago exacted all kinds of demands on Walmart, just I think to allow them to open up. I think they required certain things in their wages and their hiring practices, which ended up being problematic for Walmart. But more significantly, recently, is the crime. I mean, there's widespread looting going on. There's so much theft in these stores that they can't make any money because so much of their merchandise is getting stolen, right? And so they're saying, look, we're out of here. We're closing these stores. We're losing a bunch of money. We're closing these stores, right? So I watched this video, and you got this huge group of protesters in Chicago, right? The government, right? These are, the elected officials and maybe workers, and they're all protesting, and they're blaming Walmart. They're saying this is a disgrace. Walmart should be ashamed of itself. How dare they leave, right? And they're saying we deserve, to have a place to shop in our own community. We deserve to have jobs in our own community. What do you mean we deserve? Nobody deserves anything. You have to earn stuff. I mean, this is a perfect example of the entitlement culture that we have created here, this welfare state, where people think they deserve stuff. Why? Because you're here, because you were born. You don't deserve, you have to earn.